Big news for Soundhound AI. Now you might say big news, okay, cool, what's that? Because if we look at the stock's performance in the last month, it's down 21%. If you look at the last 3 months, it's down 32%. Year to date, the stock is still up 87%. At one point it was up, I believe, 200% or so, actually 300% after the announcement that Nvidia had invested in that company. Earlier this year, there was really a huge AI push, a pump, let's call it what it is. It was a pump. So Soundhound really went up quite significantly, not really based on any fundamentals, despite the business growing still quite fast, sales-wise. But other than that, it did not justify its valuation. Even today, at $1.3 billion in market cap, forward EV to sales of 15.4 times, in my opinion, is still quite expensive. I know a lot of you don't want to hear this because other people have said it's a great investment, can still go up to $10, $12, can trade at 40 times, 60 times. In my opinion, that's just not responsible. I've talked about Soundhound as a good option under $2. Since then, it has gone up quite a lot, but it did not make a lot of sense. Yes, the business is growing fast. As you can see, analysts are still expecting it to grow quite fast. 53.24% year-over-year growth in fiscal year 2024 and another 46.63% year-over-year growth in fiscal year 2025, and of course still being unprofitable. But sales growth is there, right? Quite fast, growing quite fast, so that's fine. My only issue with this is also that they are saying that the market that they are playing in is worth billions and billions of dollars, yet their revenue on an annual basis is only going to scratch $100 million next year, which means they are still a tiny player in that market, which could also mean that there's a potential that other companies can swoop in and take a lot of market share just because they have more money. Because as you will see, Soundhound is not actually investing quite a lot. When you see momentum, when you think that, well, you're a small player, but the total addressable market is quite big, then the logical thing to do here is to invest a lot to take more and more market share. But as we've talked about a couple of months ago, I think a couple of months ago, their competitor is investing way more than them. So that just doesn't make a lot of sense. But okay, let's see what happens. Now, we're going to talk about the good news. Two good news, actually. One, I think you know already what it is, but it's not even that one. It's the second one. Before jumping into that, if you want to support me, hit that thumbs up button, subscribe. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment. You'll get top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the first thing I want to touch on is, of course, the good news. One of the good news. Soundhound AI acquires ordering platform Allset to fast-track its vision of a voice commerce ecosystem. So the acquisition will ultimately enable customers to use cutting-edge voice AI to order food from their vehicles, phones, and smart devices. Allset is an online ordering platform that connects restaurants and local customers. As part of the acquisition, Allset team will be joining Soundhound, further strengthening the company's capability and commitment to innovation. The closing of the acquisition will bring additional restaurant relationship engineering skills and marketplace know-how to Soundhound AI as it builds towards its vision of a voice commerce ecosystem that enables customers to access goods and services through natural conversations. This includes plans to facilitate voice-enabled food and drink ordering across millions of cars, TVs, and smart devices. Now that's actually a fun thing that they mentioned here, because if you've seen, I believe it was the Xpeng CEO, he tried out Tesla's FSD, and he did comment on the fact that in the West, they still have no good voice AI system, one that understands you, one that actually works. Fun to see, well, interesting to see that they are talking about this in cars, TVs, and smart devices. Of course, it remains to be seen if it's going to work. We're going to talk about the McDonald's news in just a second. We also have to, I don't know the answer, but I assume that if you talk in different dialects and maybe if you cannot articulate good enough, if you're not really speaking the language, the system is probably going to get or have some issues. Maybe they have some ways to solve that, I don't know. but let me know down in the comment section below. This is not just for Soundhound, by the way, this is for every player, right? It's one thing to know the language, it's another to know different dialects. They continue by saying here that all set, the business has received backing from investors, including Andreessen Horowitz, and has amassed nearly 7,000 restaurant partners nationwide, a good increase for Soundhound. By the way, in all of this, there is no mention of how this will impact their guidance for the year, financial-wise, nothing of that sort. Maybe in the next earnings report, we might get more news on that. They continue by saying here the move mobilizes a key part of the company's growth strategy, enabling consumers to use conversational voice AI to effortlessly order food from their vehicles or a voice-enabled device like a TV. The CEO and co-founder of Voice AI says here, together we plan to provide dynamic and convenient ways for people to order food and complete a range of other transactions just by speaking naturally. As for Allset, we are thrilled to join forces with Soundhound to combine our established partnerships and marketplace expertise with Soundhound's class-leading voice AI solutions and capabilities. From the beginning, we realized that we share the same vision for the voice commerce ecosystem that elevates the consumer experience. This team-up will accelerate our progress towards the next exciting phase of AI-powered ordering convenience. Now, more recently, there was an announcement that McDonald's pauses AI voice ordering system developed by IBM. The fast food giant plans to relaunch a broader service soon. Now, some people are saying maybe Soundhound could be one of those that might offer its services. Remains to be seen. But I mean, this is another thing, right? If McDonald's, which has worked with IBM, and they feel that this thing just doesn't work quite yet, what's to say that Soundhound has the solution? On the flip side, maybe Soundhound does have the solution, and that's their great advantage here. Just a question. Moving on to, in my opinion, more important news is that Soundhound AI announced their early debt payoff, robust cash position, and strengthened financial profile. So they announced beginning of June that it reached an agreement with its lenders to prepay its outstanding $100 million debt in full. This agreement significantly reduces the early payment cost and enables Soundhound to save over $55 million of interest and fees that would have been due over the remaining duration of the loan. The transaction also frees up approximately $14 million of restricted cash. After paying off the existing debt, Soundhound has a cash balance of about $180 million and no outstanding debt, giving the company ample flexibility and a strong liquidity position. Of course, this is great because it's still burning money, and now at least they do not have any debt anymore. Now, with regards to the cash balance of about $180 million, that is actually down from in excess of $200 million reported last quarter. The last quarter, as you can see, the company was still losing money on a year-over-year basis. I mean, net loss has decreased 24%, so that's fine. I've talked before about total operating expenses. I mean, investment, R&D has been lowered by 33%. I mean, why is that? Don't you want to invest more in your business to accelerate your growth, to take more market share? I mean, it's great from a profitability standpoint, but you're at a point where you barely make any revenue compared to your total addressable market. You're basically a drop in the bucket here. So yeah, I understand that they need to spend less because they need to survive unless they raise more money, which will dilute shareholders. But then again, it's either going out of business or diluting shareholders. I mean, I'd rather take the diluting shareholders and see the company achieve huge success. Maybe that's just me. But overall, this is a company that is growing quite fast, right? Revenue increased 80% last quarter, so that's great. But you need to invest more to take more market share and maybe even grow faster. If we go back down to the business outlook, it's still about the same. Midpoint $70 million. The company is also introducing a 2025 outlook, which it expects its growth to accelerate with revenue exceeding $100 million, which is basically also what the analysts were expecting. And they're also expected to achieve positive adjusted EBITDA. So that's fine. Now, if you've watched my previous videos on Soundhound, I still have the same question about the combined cumulative subscription and bookings backlog of $661 million. Yes, it represents a 2x increase year over year. But if we scroll back down, this is basically the explanation. Subscriptions backlog refers to potential revenue achievable for the company with current customers where the company is the leading or exclusive provider, and assuming a 4-year ramp-up during which time our technologies are being implemented and assuming a successful full rollout of our technologies over a total 5-year duration. So again, this is about potential achievable revenue might or might not happen in the future. And so right now, looking at the stock, we're at an interesting point. We're at the 200-day moving average, where previously also we've got that downtrend after that huge pump at the start of the year. We hit the 200-day moving average and we rebounded off that back in late April. Right now, we are basically doing the same so far. This is again on a weekly. Let's see if we can remain above that 200-day moving average, because if we drop below, then you're basically in no man's land and you truly have to look back at around $2 or so. Now, will that happen? I don't know, but right now it's extremely important to stay and respect that 200-day moving average. RSI still pretty neutral. So overall, to conclude, 2 positive news items that came out for Soundhound. One is more important than the other. Like I said, the debt payoff is more important than that new acquisition, which again, we have no financial information. How will that impact? Is guidance going to be raised, etc.? We don't know. So the debt thing, in my opinion, is a bigger deal. Now, what will happen in the future? Could they partner up with McDonald's? Remains to be seen. There's still a lot of question marks with regards to this company. Yes, it's up 87% year to date. Yes, it's down 30% in the last 3 months. And yes, it is still quite expensive, regardless of what you might think of it. And just because Nvidia once invested in that company does not make it now your number one AI play. No, again, a drop in the bucket for a company like Nvidia. That's about it for this video. Do share your thoughts down in the comment section below. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.